Let's now focus on the Indian stock markets, which today the indices witnessed a sharp fall, both the Sensex and Nifty. There was a sharp fall during opening trade, and these were dragged down across the board, selling amid weak global cues. Benchmark Sensex tanked more than 1,100 points at opening, while the Nifty began trading 395 points lower right at opening, and since then it has crashed further. Several factors are causing this decline in the market. Heavy selling in banking stocks weighed on overall markets, with HDFC, a bank share price tumbling, also dampened US rate cut expectations and weak global market cues. Well, to talk more about what's driving down the markets and creating this negative sentiment, we're joined by Agam Vakil of NDTV Profit. Agam, so tell us more about what's driving down, the markets, and also the situation in the Red Sea, dampening, this worldwide sentiment.
Absolutely. So a whole list of factors which are playing against the markets right now. Firstly, to set the context up, we are seeing the markets come off from their life highs which they made very recently. Now, every time we see markets make a new life high, we tend to notice and perhaps also experience certain market participants look for triggers where they can in fact go ahead and book profits. This partially is one of the big reasons behind today's precipitous fall in Indian indices. And that was accentuated by HDFC Bank, that is India's largest private sector bank's earnings coming through. Now, prima facie, the earnings weren't as bad as the 7% cut that we're seeing in terms of HDFC Bank. But once again, it was trading near life highs. The reason why HDFC Bank is so important to Indian indices is because it comprises about 10% weightage for the Nifty 50 index and nearly a third of the weightage for the banking Nifty index. Because of this fall in HDFC Bank, we are looking at even more weakness in several of the other private sector banks, which would include ICICI Bank, Kotak Mahindra Bank and Axis Bank. Taking cues from the banking sector, of course, we're seeing several other sectors also react, and thereby the selling pressure coming through. And of course, let's not forget, as you've already mentioned, we are looking at geopolitical risks which remain high, which have also weighed on sentiment, along with the fact that oil prices could be volatile, and that is also something that could potentially send input prices higher, and thereby resulting into perhaps lower margins going in. All in all, these are the several factors behind which we are seeing the weakness in Indian equity markets at the moment.
Right, and Agam, a bit of a fortune teller, but are we expecting these losses to extend over the next couple of days? Can we, say how long this bear run will continue?
Right, so it's a wait and watch on this one. We are keeping an eye on the kind of selling that foreign portfolio investors will possibly have come through in today's day of trade. Besides that, we also want to try and understand better as to whether or not domestic institutions do still think that there is some value as far as the Nifty is concerned, considering the kind of earnings that we can expect from the corporate sector going forward. Let's not forget that the third quarter earnings are now going to start coming in, and it's going to give us an idea about the kind of trends that we can in fact expect from Indian equities, and a lot will depend on this whole host of these factors that I just mentioned.
All right, Agam Vakil there talking about the stock market decline that we're seeing and the various factors behind it. Thanks so much for joining us.